There we go. So, all right, let us just start now. Okay, so welcome, guys. A very good afternoon. Welcome to today's live geometric trading market outlook. Okay, we are on a live market, and today is the 16th of February 2017. So I'll just read aloud the risk warning at this moment of time, and we shall then start straight away after. So Forex and CFDs are leverage products and involve a high level of risk and can result in the loss of your invested capital. Therefore, Forex and CFDs may not be suitable for all investors. You should not risk more than you are prepared to lose. Before deciding to trade, please ensure you understand the risk involved and take into account your level of experience. Seek independent advice if necessary. So that's it, guys. So let's get into the chart, and we've got quite a number of very interesting information or tips for you today, as well as some trade ideas. Okay, but we'll just start very quickly with a little bit of tutorial. I wouldn't say that it's just to teach you and things like that. It's just that we've got quite a number of questions about clock angle and EMAs, or exponential moving averages, as well. So I want to use the example of the US 30. US 30 is your Dow Jones, or in short, it's a DGIA. Okay, it's just stocks. So we are not analyzing stocks, but just because it's got a very clear example of how you should be looking at trend in combination with the use of clock angles, as well as the exponential moving averages as well. Okay, so here, for example, we're looking at the 1 hour chart. Okay, and we are, let's say, wanting to look at the clock angle at this moment of time, and the clock angle is just your very obvious price. Let's say the one here, for example, from where it started to where the current price is. So that clock angle itself, you could there's nothing accurate or inaccurate about it. You don't need to be very accurate with it at the first instance. Okay, for the clock angle, you can even start from lower end here, and then you can look at that angle. That angle, clock angle there, is thought to be close to in between 1 o'clock to 2 o'clock angle, because a 1 o'clock angle will be much steeper, 12 o'clock will be straighter, pointing towards the sky, 3 o'clock will be sideways, and 2 o'clock would be lower. So that would be in between. So that would still be giving us bullish type momentum because of the angle. Okay, it's not at 2 o'clock, it's closer to the 1 o'clock. And if you take that whole thing there, here, for example, you've got a steeper angle, and that steeper angle would be giving you a bullish momentum. So that is how you look at your clock angle. Now your EMAs, just because we've got quite a number of questions during the week about the exponential moving average. Okay, so you can always insert your indicators here, go into your indicators, and then you click onto your trend and you look at moving average. And the three moving averages that I use are the exponential moving average of 50, 100 and 200. So you want to do your MA method here and choose exponential, not the simple, not the weighted or the smooth, but the exponential, the second option. And once you've done that, you apply that always to close, and you start changing the period there, starting with 50, and then you click OK, you change the color, 100 and then 200. So that's how you insert your exponential moving average. Now your exponential moving average, I mean, quite a number of traders are a bit confused about how I use the exponential moving averages. Now, just to keep it very clear, the exponential moving average that I use are strictly for determining the trend. I don't use it to enter. I don't look at whether or not the moving averages are touching, crossing one another, and then giving me a buy or a sell signal. All that, I don't actually use it that way at all. What I do is I apply them and I look at whether or not the current price, let's say we're looking at the 1 hour chart, the current price is above all the three lines or they are under. In this case here, the DGIA or Dow Jones is showing me a bullish momentum. Why? Because you look at all these current prices, they are way above all these three lines. And another tip for you is to look into all these three lines to be far apart, pointing upwards, and they are not entangled like this. For example, they're not entangled like this, but they are clear from one another, giving you some distance in between each other. The further apart they are from one another and pointing upwards, the stronger the uptrend or the bullishness will be. Okay, so this is just a tip for you guys because there were lots of questions about it, so I just want to clarify that. And feel free, if you guys have got more areas that you wish for me to clarify, I can always do that very briefly during the webinars as well. Okay, so let's get on with one of the pair here. So once we're clear with the clock angle and all that, that would help you help give you an idea. Now this is USD JPY on a 1 hour chart. We have had some good trades regarding in relation to USD JPY on various time frames, on various patterns as well. Now what we are looking at the USD JPY now at this moment of time is trading the Z-like pattern. It is called the bullish Z-like pattern. We're expecting this move now. Okay, it is actually quite close to the target area here at the D point, but not just quite yet. Hasn't actually touched that area, but it has been a very good trade because the how do you call that, the entry area is close to half of this distance here, okay, at the time. So we have got ways where we look into how drawing patterns that would give us an idea of where to enter, but this here we only trade the C to D leg, and that would be the same for all the other patterns, whether it's an A, B, C, D, an M or a W or a Z-like pattern. We usually trade the C to D, the last leg. In this case, because it is a bullish ABCD, meaning A, B, B to C, and then C to D. Yeah, that's A, that's B, that's C, that's D. We are targeting, or we are participating in the trade from C to D to the downside. Okay, so we are targeting the D area as our exit area, you can call that, or the take profit area, you can call that. So that's also a reversal zone, meaning once you have sold middle of the way somewhere and you're looking into a sell or a bears market, targeting downwards, it may then reverse around the D area upwards. So we are looking at the C to D, and once it completes the C to D, then you are looking at it moving upwards, a bounce upwards. So at this moment of time, the direction is to the downside, and this is the 1 hour chart for the USD JPY. So I just want to be very clear, whatever I've shared with you, like the cup and handle pattern, that was on the monthly chart. So monthly chart, we're looking at a bullishness, but in the long run, meaning from 3 months, 2 months, 3 months, right up to 6, 7 months even. Okay, so towards the end of the year. So that is the bullishness that we see in the cup and handle pattern, that is looking great at this moment of time, but anything can change anytime. But that is what we expect from time to come. But we are then going to lower time frame and looking at whether or not the lower time frame moves are building up the pattern properly. Okay, so this is what we do. So hence the reason I have always mentioned about trading in stages. So we are trading in stages for the USD JPY now, and we are trading the Z pattern, and we're trading the C to D leg. So we are expecting a bounce off the D area, but we are looking at the C to D to the downside. Okay, I think I've got some question here. Now, Michael has got a question here. He has asked, how do you enter on a Z pattern, or how do you spot an entry? Now that is a very good question, but it's a little complicated. It's not complicated per se, but it has got quite a number of steps. But this is classified or categorized under an advanced pattern. So it would be best for you to attend our members area. Tutorials are available in our members area of the FX Geometry once it's complete. Okay, it's not very far away from completion now, so I will be sending you the link to that, so you'll get a clear, more defined, structured tutorial. Okay, because you would need to first go towards the basic patterns first, tutorials on the basics, like the ABCD pattern and all that, and then come to more advanced type pattern, because we have got quite a number of drawings, and all of the drawings that we do are geometric type drawing patterns that you can do very easily, but you would need to be shown step by step how you do it, and then you can find your relevant entry points and things like that. But one very simple rule that you can actually use without going to the complication of geometric pattern is by using the principles of psychological numbers itself. Okay, but before psychological numbers, you first will need to determine the trend. Okay, your trend needs to be very clear. So say that you are clear with a downtrend, let's say, and you are looking at us at the GTI group in Telegram as well, releasing that and giving you an indication of a downward move. So you would be catching that move at the time that you are available, right? When you look into the market at the time that you are available, and you look at the market and you wonder whether it is still the time that you can enter. So the direction is yes, and then let's say it hasn't even touched the area. So you've got some room, let's say, between here and here to actually trade the downside, let's say, yeah. So what you then would do is look at the psychological numbers, look at the price as of now. So the price here is 113, okay, 0.57, okay. So one of the ways to understand whether you should be entering at the time or not is using price action and psychological numbers. So here you are trading to the downside. The last two digit is 57. Closest to the last two digit is 50. Now this is not a good place to buy or sell. So if you are looking into selling, then you want it lower than 50, at least by 10 pips. That gives you 40. So 113.40 would be then your probable or ideal entry price for you at that time, because you're looking at price actions based on psychological numbers, let's say, right? And then you see that I have put here the D area at 113.28, so 113.28, okay? So you're trading to the downside to target 113.28. Now 28 is closest to the 20 side number down there, right? So you need to escape. If you're coming downwards, you need to escape 10 pips above the 20, which gives you 30. So then you've got 113.30, okay, 113.30 as your selling area. Now looking at that itself, it's just too close between 113 to ideally enter, and then 113.40 to take profit at that. So that would then help you decide that this may not be worth for you to enter this trade on the sell side, perhaps on the buy side later on once it has a reverse, but not on the sell side, because the gap is just too small, the opportunity is just too slim for you to take at that time. So you can always determine whether to enter or not, Michael, based on the psychological numbers, price action itself. Okay, hope that is clear for you, Michael. Okay, so that is on the USD JPY 1 hour chart. So I'll just erase that drawings right there. Now, if you've got any questions meantime, feel free to ask. Now, within the USD JPY 1 hour chart, of course, we're looking at that big pattern there, A, B, C, D. That's your Z, bullish Z pattern. Within the C to D, you're able to confirm, for example, whether that there are possibilities of a downward move. In this case, the answer to that is yes, because we've got an A, B, C, D as well in between. So you can always be trading the A, B, C, D. So that answers your question as well, Michael, that you can determine your entry of your trade, sorry, based on the ABCD pattern within the C to D. So the Z pattern itself has got its own ways, but within that C to D move, if you're trading the ABCD, then you're looking at your entry area at the centroid area of the ABCD. Now the best part of the Z-like pattern as well is that the C to D usually moves in an ABCD type way. Okay, so you've got A, B, C, and D. So when you spot and see the availability or the start of the ABCD formation, you can literally trade the ABCD in this leg itself. Okay, so you are going to apply the same principles of an ABCD pattern by attaching the A to the D, and then look into your center point and enter through there as well, like what we've done here. Of course, there are many ABCDs in this area, depending on where you're looking into the market at the time. Okay, so that's your USD JPY outlook at this moment of time. We are expecting from a geometric perspective a bounce coming very soon. Basically, the prices should be coming towards close the D area or even start to bounce very soon, only because we are looking at that challenge being challenged. The prices are being challenged, for example, or the sellers are being challenged by the bulls, especially right at the 200 moving average. As you can see, prices is just picking up right as we speak. So it is very close to the 113.68. If further down, it would be 113.50, which is your psychological level anyway. Okay, so your psychological level is at 50s area, right there. Let's say 11350s area right there. So even if you have entered the market earlier on selling, you would be exiting at about 60 anyway, so you wouldn't be taken out so much with the bulls coming into the picture, because it may actually even be time to look into buying opportunities as well. But it's just that your risk is measured by these lines here, the EMAs, exponential moving averages as well. Okay, so that's your that's the outlook for the USD JPY, whereby we most probably have seen this completing, but because it has not touched the D area there, it is really risky at this moment of time, because what could then happen is you may find an ABCD, you may find this bullishness tricking the market, tricking traders, going upwards and then coming back down and then hit the D, and only after hitting the D area that you will then bounce up and then consider the Z pattern to be complete. At this stage, maybe still too early, okay, but it may be building up a nice ABCD for you, meaning that this move up may build the B to C. So that will be your A to B, and then it comes back down again, and then you would then see that Z pattern to be complete to go upwards. Okay, so here we have got some tricks of the market. That's your USD JPY for you guys. Okay, let me see what I could gather on the monthly. Now, this is what I would like to talk about as well in the USD JPY on the bigger perspective. On the bigger perspective, we have got we're talking about the monthly chart. The monthly chart here, as you can see, gives you the bigger picture of what you could expect in months and months down the road, but gives you a bit of a roadmap of whether or not the shorter time frame they're completing the move to have this pattern, the bigger picture to materialize. Okay, so here, for example, you have got, as I have sent in the Telegram group, you have got the cup. Okay, cup and handle. Now we are expecting more upwards, so that it goes upwards like that, return down a little bit, and then up again. So that big up move from the mouth of the cup area, let's say this is the cup, the mouth of the cup area, you're looking at a burst out or a breakout, and then come back again to the mouth and continuing on further upwards. That upward move from the candle, from the mouth of the cup itself, has got the potential of being this much of a pips. That's close to about 4,000 plus pips, but we're talking about months and months down the road, up to about June or so, or even May, June. So that is quite possible, because accumulatively you will have that much of pips, potentially being collected from now until the middle of the year or so. Okay, so this is the biggest perspective, the bigger picture. So that's your bullish cup and handle, still forming. We are still waiting for that to go upwards towards the mouth to break out. So on top of that, we've also got a bullish ABCD. Now, where do we see that? Still on the monthly chart. The bullish ABCD could be seen here. Okay, A to B and then B to C. That's 50% Fibonacci of your A to B. Okay, so you're targeting that to go further up. So that would be the similar in length as well. So that sort of confirmed that there are more possibilities as well for it to actually move up more. Okay, now the other pattern that is confirming all on the monthly chart itself is the Z-like pattern here. So you can always start off here, A to B, and then B to C, and then C to D. So you've got A, B, C, D. Upon completion at D, usually it bounces off. So it could bounce off to the 50% level or even more. So that again is giving us an idea that this area that it has bounced up from may be a very strong support. And hopefully it's strong enough to burst the price upwards to break out of the mouth of the cup to give us more momentum to the upside. So what we would need to be aware of is to look at whether or not we've got more and more news, whether it's Trump, whether it's political, economical, or anything like that, that would be positive for the dollar. Okay, positive to the dollar and positive to the economy of the US, so that could then be still building up the zigzag to go up and then burst out, come back, and then upwards. Once it does actually come out of this area here, the 125.70s or 125.80s area and above, then you've got quite a high probability of prices going upwards much more, because then it would mean that this cup and handle pattern has actually succeeded, because till now it has got many criteria that would confirm it to be a nice high probable cup and handle pattern. Nothing has actually broken that criteria as yet, so it is still going strong with that. But what you would need to do is looking at lower time frame to look at other patterns that you can trade in, I wouldn't say in advance, but then to trade it in shorter term, for example, yeah, and to trade it in stages. Okay, so that's what it means. All right, there you go. That's your USD JPY outlook there. We'll quickly go on to gold just to give you a bit of an idea. We'll skim through as many potential trade ideas as we can from a geometric patterns perspective. Okay, before we answer questions as well. So here we'll just move on to the gold chart, and I want to start with the gold chart, but on a bigger perspective, which is the daily chart. Okay, now this is something I have shared with you already, and I think since the time I've been sharing this chart here on gold some time ago, perhaps about a week and a half ago, I've spotted that W-like pattern. So we are now, just to make it clear, looking at the potential to the upside, okay, for gold from C to D. But again, we are looking at the W pattern of the daily chart. Okay, so we are looking at all this zigzag going up and then finding its way into the PRZ zone. The PRZ zone is your potential reversal zone. So once it goes into this blue area, anywhere within the blue area, or even just before or just as it has entered the blue area, or anywhere in within, it will then find its way to get a correction and come downwards. Okay, because this is a W-like pattern. So W-like pattern, that's your X, that's your A, B, C, D. Once it reaches D, it's looking at a downward move. If it is an M-like pattern, that's your bullish-like pattern. That's your X, A, B, C, D, and then you're looking at an upward move. Okay, so this is basically what's going on with gold on the daily chart, just to give you an idea of a direction. The direction is to the upside, but again, if you go onto the lower chart, you will find correction, you will find rebounds, you'll find all this, because the prices don't trade in straight lines. So it's going up and down, up and down, up and down. But it doesn't mean that because I spot this W pattern for you on the daily chart, you are not paying attention to your equity and trade the daily chart. Does not mean that you should be doing that. You should be looking into lower time frame to trade on a smaller sort of moves, okay? Because the bigger the pattern, the bigger the moves in the bigger time frame, the bigger your corrections are. And the bigger the corrections, if your equity is not enough, it'll be easier to wipe them out, okay? Or wipe them out, all right? So this is basically, so we have got that potential. Now within the W pattern, you've got A, B, C, D pattern. You can literally trade that according to the A, B, C, D pattern only, and still we are looking at this AB equals CD. So there are some room going upwards, okay? So just to be clear, I'll give you an indication of gold on the 1 hour chart, because we have seen We've just gone on to USD JPY on the 1 hour chart as well as the daily chart, but here on the 1 hour chart for gold, I want to make the comparison for you so that you can see it very clearly on the 1 hour chart, gold 1 hour chart, and USD JPY 1 hour chart. Okay, now on the USD JPY earlier on the 1 hour chart, the opportunity is a little bit of sell from C to D, but it's almost touching D already. But then we can see the D to E going upwards. Once it has reached the D point, we can see the bounce upwards. So we can trade that on the upside as well. That is for the USD JPY 1 hour chart. Now for the gold chart, gold 1 hour, the current opportunity that you can see, let me just clarify this, make it very clear for you, is a little bit more room up until it reaches C. And then once you have actually taken profit here or exited here, then the opportunity will change to the downside, bearishness, until it touches D. Okay, once it touches D and you have taken profit the D point, you can then usually in a Z-like pattern, you will see how you call that, an opportunity to the upside, and the upside opportunity would be going towards E, let's say. Okay, so you are trading, first of all, now it's still B2C, a bit of momentum to the upside. There's some bullishness for gold because of the bearishness for the dollar, okay, in general, but the bearishness in the dollar is not a total change of trend, it is maybe a correction. Okay, so yes, a bit of room to the upside until you see C. Okay, now we are at 1237. We are looking at a potential of it reaching close to the 1240s area or 1245 area. So once it does, if it does reach that area there and then start to bounce, start to rebound and come downwards, then it is forming a clearer Z-like pattern. At this stage, it's just got room to the upside. But what if it just come down all the way? Then I would say that the Z pattern has actually failed, but you wouldn't be in the trade anyway. Okay, because we like for myself, I'm a bit of a conservative trader, so I only trade the C to D leg. I very rarely trade the B to C, A to B, or anything else, but just strictly the C to D leg and sometimes the D to E leg. But at this moment of time, the C to D is just not existing for me as yet, because I would need to wait till price go upwards, okay, touches the area of 1245 area, find a bit of resistance there, and then being pushed downwards. Then I'll take that trade on a sell side to actually enter under 1245. Below, maybe I'll wait until it is about $10 less than the 1250 psychological number or psychological price. Okay, so 1250 psychological price, let's say I ignore the last two digits, and then $10 and below, which is 1240 or even 1201, 1202, sorry, $1 or $2 in between that. It's fine. So 1242, 1243 also, and I will see it coming downwards, and then I'll participate in that trade to the downside, targeting it at the 1230-ish area, maybe 1230.90, let's say, also, and I'll take profit there. Okay, but for now, it's a no-show, it's a no trade, because I need to wait till the momentum goes upwards and find a correction to the downside. This is your 1 hour chart gold opportunity. Okay, so 1 hour chart gold opportunity, a little bit to the upside, but like I've said, I don't trade that B2C move at all. It entirely depends on the risk appetite of the trader himself or herself. Okay, but I am interested to wait until it reaches C to come downwards towards D, and that's the leg that I will be trading. Okay, so this is the differences. You have got both similar type leg, I mean they are similar in terms of the Z-like pattern between USD JPY 1 hour and gold 1 hour, but the sections, the areas that you would be trading will be totally different. Okay, so in the direction of trade, basically based on the pattern. So hope that is clear for you, giving you a bit of a comparison between USD JPY 1 hour chart and the gold 1 hour chart. Okay, all right, so let's just move on as well. There are a number of traders who have asked me about silver too. So let's just, since we are on the gold side of it, let's go very quickly to silver as well. So here we've got silver. Now, silver, it's got something similar going on the daily chart. Similar meaning a Z-like pattern. Similar also means that here, for example, I've got A here. Okay, let me just clearly do that. I've got A here. This is a bullish type pattern, a bullish Z pattern, A. And you've got B here, I've got C here, and I've got D here. Okay, I'm expecting the B to C to go upwards. And once it corrects itself here near the C area, it'll find a way to come downwards and target the D area here. So like I've mentioned, I am not a fan of trading in a higher risk environment. So I find that trading B to C may be a bit higher in risks as opposed to C to D. So I will only trade the C to D move, okay? C to D to the downside. So I do need prices to go up a little bit more, and I expect if it does go up a little bit more, then reverses, then I would say that that formation, Z-like formation, is becoming clearer and more successful. If it doesn't and couldn't find its way to the upside, then it still will make a Z, but it's not the Z with a higher probability if it starts going down now. Okay, all right. I want you to also notice, for those who are interested in silver or want to know a bit of silver, you can see that you've got loads of ABCD as well. Okay, loads of ABCD coming downwards, and you've got this equal in length as well. So you've got perfect geometry as well. Now these ones here can be made into a square. If you extend that line all the way down here and all the way down here, that becomes the trend line as well as a channel, and that is basically where it would go upwards, come back down to again this area here. Okay, so everything is connected. Okay, so you have got even from a simple ABCD, okay, you can actually create squares with it, and then when you extend all these squares, you copy and paste the squares, it makes out a channel, and prices usually goes in within the channel. If it does go up, come back to the channel again, so on and so forth. Okay, that's the wonder and magic of geometry as well in trading. Okay, so let us just go on to the next there. Now, if you guys have got any questions with silver or any other pairs that we just talked about, feel free, you can type it into the box. Okay, let's quickly go on to Euro USD. Now, Euro USD was a very nice trade yesterday because, let me just clarify again, where I was trading is the C to D area, because I've spotted an A, B, C, and D of a Z-like pattern, and that's a bullish type pattern. Okay, so I was trading the C to D, expecting it to come down to this area here and then bounce up, and that's exactly what it's doing. Now D to E is moving. So D is moving upwards, bullish momentum towards E. But initially, yesterday, day before yesterday onwards, I've been trading in between this, in the middle area to target to the downside, and it indeed reversed at exactly where it was supposed to reverse, and now it is to the direction of where we expect it to be. So the D to E is on the upside. You can trade that. If you previously have actually traded C to D to the downside, taken profit at close to the D area there, then congratulations to you guys, happy pipping. So now wish you happy pipping for the D to E move to the upside. Now, how far would it actually then move? It's not too far. Okay, the reason for that is because we have got trend is still favoring the downside for the euro, because there's a lot of things going on in the eurozone, especially fundamentally, politically mainly. We've got the elections in France. They're now talking about Frexit, not Grexit. Grexit is Greek exiting the eurozone. Now we've got France, Frexit, exiting the eurozone as well. So we've got all these exits by eurozones. We've got elections coming up, so it is rattling the area a little bit. It's giving some shakes to the political situation, economical situation, the currencies itself. So eurozone, so the euro is impacted, so it's giving you some more bearishness. Now, the reason why I say it's not too much as well is because usually if you've got a Z-like pattern like this one here, okay, and that's your A, B, C, D. Let's say it has reached, like this one here, has reached the D area here, and it's starting to bounce upwards. Usually the bounce up wouldn't be too much high, wouldn't be a target that's high way up anyway. If you are trading C to D, you know that you want to take profit around here. But if you're trading D to E, let's say, you're usually looking at about 50%, okay, of C to D. Okay, so what you do is you look into pulling your Fibonacci, okay, from here. We're talking about C to D. Why? Because you're trading D to E now, upwards, okay? So you pull your C to the D, and then you mark your 50%, which is there. Now, 50% is marked there, okay? Now here, if I have actually traded at the 1.0560 or 1.0590 area, my target is at 0.670 or so. Okay, now we are at 0.640. Now that's your target area there that you can target. You're buying around there, you're exiting around there, let's say. Okay, so we've got that area to look at, but we also see that the candles are behaving a little bit weirdly. Why I say that is because they are not giving you clear instructions, a clear direction or clarity that is moving up a lot. It's just playing around here. And the most important thing is that the behavior of the wick. The wick is sort of stayed on and stuck there, and is exactly at one of the moving average, and it is pointing at the 200 moving average there, and it sort of got stuck there, and the body of the candle is not moving higher and higher. So that is, it looks like it got jammed up there, the price, and there may be a potential for it to start moving downward. So these are the challenges here. Okay, so 1.0640 would also be my take profit area, because the next one up is 0.650. So for the D to E move, I most probably have exited by now. Okay, because I would have entered around there, let's say, all the way up there. That would be about 50 odd pips. So the 50 odd pips is good enough for that, because your C to D move has given you quite a big chunk of number of profit of 100 plus 150 or so pips from where I've started trading the middle way right down to the D area, and now D area right up. So I have exited, let's say, that trade and benefited for about 50 over pips. So that C to D gave me about 150 pips. The D to E has given me about 50 pips. So that is a good close to 200 type pips that I've gained from the Euro USD Z-like pattern, trading C to D and D to E. Okay, so that's your Euro USD at this moment of time. So now it's time to rest that trade for the Euro USD and wait for it to come down lower. Once it does, then you will see a potential ABCD pattern building up. But now it's a little bit too early. Let's wait for prices to come down a little bit. Then you can see an A, B, B to C, and then C to D. But you need this to come down a little bit, price to come down a little bit, so that it will go towards your centroid area here and only enter under the centroid, take profit at the D area here. So you've got that area here to trade. So now too early. Okay, and we're also looking at the 4-hour chart. Perhaps you want to look into lower time frames, to look into other patterns that may give you more opportunities there. Maybe perhaps ABCD patterns. Okay, so let's look at that very quickly. Euro USD on lower time frames. Okay, and let's zoom up a little bit, go on to 5 minutes chart, and you can see that, let's say we're looking into lower time frames, and we want to cluster 3 time frames of 5 minutes, 15 minutes, and 30 minutes. Okay, let's say 5, 15, 30. So we look into 5, and we can see it's finding support, going upwards. It may find support again, so the direction is upwards. We have got no entanglement of these 3 EMAs. We're looking at prices well above all 3 lines, so it's giving you some clarity of an upward trend for the 5-minute chart. Do we see the same for the 15 minutes chart? The answer to that is yes. Now we have got a point that it has actually reached or found the bounce at the close to the moving averages. That's a good indication that it has been pushed upwards quite well. So the support is fairly strong. Okay, you can always do an A, a B, a C, and then look at the projection to the upside. Okay, so this is on the upward momentum, bullishness as well on the 15 minutes. What about the 30 minutes? The same, and it's further away. Do we find the same on the 1 hour chart? 1 hour chart start to find some resistance because it's really close to the 200 moving average. It's a bit, it is unpredictable at this moment of time, also because of uncertainty. The prices are in between three lines. Let's forget about the 1 hour chart for now. Let's look into lower time frames, 5, 15, 30, giving you a little bit more room to the upside, a little bit. That means your corrective move most probably, because the USD is going on strong. Now here, that does then justify a bit more room and then coming downwards. Okay, so it could be 50% of this length area right up there to the 0675 or 80s area, and that is close to a psychological number, and then we will see more room perhaps to the downside. Okay, all right, let's see. I just want to measure this a bit. Does not look like it's that like pattern there, so we'll ignore that. So here we want to zoom in a little bit, look into the strength of the candle as well, look at possibility. You see prices there. You can have a smaller A, B, C, D, and you can see whether it's time for it there to find resistance. You can see that there, or you can grab that one there, go all the way up here and find more room to the upside. How much more room? That's basically roughly there based on the 30 minutes chart. Okay, but looking at price action itself, 1.0637, to be conservative, I will wait until it goes at 50, 0650. Okay, and if it does cross 50 towards 60, then the entry will be 0660 onwards, and then you can look into taking profit before it reaches 0700 area. So that's 0699. Okay, that's very close to 0700, which is a side number again. So 0690 is your area for exit if you're looking at entry 0660 entry for the buy, and then 0690 to take profit or exit the market. So you've got close to about 30 pips or so. That 30 over pips, you wouldn't be hurt in the market if you have done a pending order. So you would enter the price of a pending order at 06 to buy, yeah, 0660, let's say, and then you are looking to 0690 as your potential take profit area. So that is entirely dependent on the trader, because here it is very important for you to use the principle of psychological numbers as well to measure your risk. Okay, so now you wouldn't be hurt, for example, if you have not just entered the market as soon as I've said, okay, there's some buying opportunities, some more, and you didn't enter straight away. You entered a pending order at the right price, and the right price would be, let's say, a bit more conservative, like I've mentioned, 1.0660 onwards. So let whatever going on to go on. This might find a bit of a support around this area, let's say, and then looking upwards, because the opportunity is to the upside based on what is available. So I wouldn't be riding what I'm not sure about to the downside at this moment in time. There's no pattern for me on the downside. That pattern's potentially to the upside, not the downside. So upside potential, upside ABCD, and I trade the C to D leg. So this is not an ideal setup for me to trade to the downside, because there's no reasons for me to trade to the downside, no reason in terms of patterns as well as any other setup criteria that I have for myself. Okay, trading with the patterns. So there you go, 5, 15, 30. Now overall, on the daily chart, you're looking at prices still to the downside. You do have some upward momentum, but we're looking at prices, as you can see here, under the 3 lines on a very long term, weekly as well as monthly, again hinting us more downward type move. It's very uncertain in the 4-hour chart, so at this moment of time, do be aware and avoid the 4-hour chart or trading based on the 4-hour chart. It's probably best to look into the lower time frames for now and be safe in that respect. Okay, it's just giving you a lot of unpredictability at this moment of time. But for me, it potentially is a bit of a correction, which is to the upside, and then long term onwards, it's to the downside for Euro USD. Okay, now it's the same for the NZD USD on the daily chart, for example. Prices is looking like it's giving us a bit of a bearish momentum. There is a potential Z-like pattern only if only if it starts going up more and meet this area of C, then I could look into the potential opportunity to trade the C to D to the downside. Okay, and then maybe a potential D to E as well to the upside, but that's just too early a stage because we need the B to C to complete. B to C needs to complete to the upside, go towards C, then we are looking into that rebound move coming downwards, which is C to D. Okay, that's for your NZD USD. So if at all you're looking into a potential upside like move, then here you can see that the chart's quite naked in terms of the indicators applied. So one indicator that would be good for you to apply will be your 3 moving averages, your exponential moving averages. Okay, so let's just apply that very quickly to look at whether or not we could see some potential in trading the NZD USD as well. Okay, so here if it is the 200 right there, indicators, trend, moving average again, and then you put in your 100 exponential moving average, change the color, let's say there. So you've got your 100, your 200, and your last one, your 50 moving averages, sorry, and you've got 50 right there. Okay, and then you've got that 50, and you apply that, you've got 200, 150. So here, as you can see, it's finding support. So that may actually hint you, this is still on the daily chart, hinting you that because it found support at the at one of the moving averages there, it's a good sign that it may push the prices upwards. Okay, and we're just waiting for the upward momentum to reach that area there. So because it has potential to the upside, you're looking at potential ABCD to the upside. You want to look at whether you can trade C to D for a bullish ABCD pattern. Okay, so then we now know the direction is a probable upside move, hence we go on to lower time frame. Okay, we go into lower time frame and we try to check onto the trend first. Here it's not giving me clear signal on the 15 minutes chart. Prices are in between all 3 lines. There is no pattern. There is just no point looking for patterns when prices are in between the 3 lines. So we go on to bigger time frames, still the same, in between the 3 lines, not clear. 4-hour chart, not clear as well. Daily chart, a little clearer with prices above 3 lines finding support. So in this sense, the NZD USD does not permit you or give you an opportunity for the small account holders of 500, 1000 less equity. It's best to avoid this pair for now because the lower time frames from short to medium does not give you clarity. Okay, so for the bigger boys, for the bigger traders, 10K and above equity, and you've got some to spare, and your risk averse, your risk appetite is much bigger as well, and you don't have large floating at this moment of time, and you're looking at a potential. Yes, you can consider this trade to the upside, but you would need to look at it at an A, B, C, D perspective so that you can look into a better entry area based on price as well as support resistant zone. So 07205. Okay, so now the price itself, based on price action alone, let's say I would prefer for the prices to go above this line. This line is a powerful line of 50 moving average, 50% of Fibonacci, okay, 50% of the B to C. Also, it's the same length AB equals CD as well. So this is a very important line. I would prefer for prices to go above 0.72 50 and above. So 0.72 60 would be the ideal entry price for an upward move. Okay, so not just yet. It's based on the daily chart, but that is to appear conservative. Okay, the other one is the other price you could look into is based on the price itself. To look into the upside would be 0.7 to 10 or 0.7 to 30. Okay, This is based on the 30 is the 20 site number above the 20 site number, 10 is above the 00 site number. So these are your prices right there. Okay. So there you go. You've got a potential NZD USD to the upside, but not just yet. Only appears to be quite clear. What do you call that? Above, a little bit above the 3 lines, but not just yet. Due to the prices. Okay, it's too close to the 00 site number as well. I see that some room needs to be met to the upside above the 20 site number, giving you a better ideal price to see the momentum of the bulls only once it reaches 0.7 to 30 and above. Okay, that's for your NZD USD, guys. Now let's just look into other pairs here. Now we have got what is going on with the GBP versus the dollar. So let's start off with the 5-minute chart. Let's look into what's going on in terms of price and the exponential moving average first, because that's the easiest way for the trend. You want to look at whether they're in between the lines. If they are, forget the time frame for now. It's just that it's not very it's not only it's not ideal to enter, it's got lots of risk involved. Okay, we're seeing price, yes, coming down strong, but then you've got a 200 moving average here. Maybe the gap is not that big as well, so it's just not worth. Okay, but one thing that I can say is just looking at it at a glance here, it may be a possibility of an M-like pattern here going about, and it's looking to me just visually quite clear. Okay, first you start with the ABCD. Okay, yes, it may be a potential AB equals CD, so a little bit more room. That room here would be your D point. Okay, we reverse backwards. Now D, C, B, okay, and A. So you got A, B, C, D, right, to the downside. So that A, B, C, D, combine that with a bigger move before that, then you've got an M here. So X, A, B, C, D. So this gives me a clue, a hint on the 5-minute chart. Potentially it could come and rebound and go upwards when it comes close to the D area. Also, there are chances of it to rebound because you've got the 200 moving average right there. Okay, and once it does, and this is an M-like pattern, like I've mentioned earlier on, once it goes to the D area, then you're looking at a potential to the upside. Okay. So that's your GBP USD on the 5-minute chart. Now, let's erase all drawings here. Now, for me, because I'm a conservative trader and I look into the areas of risk, I wouldn't be participating in this trade only because we have still got the prices in between all the lines. Okay, there may be a potential, but I would like to look into clearer area, for example, like this one here, a little bit better than prices going in between all lines. But what about the 1-hour chart? It's still giving me that hint. 4-hour chart, again, it's entering that area that's just not really clear. So this is your GBP USD. It's just not the timing yet, if it is for me personally, but then for those of you guys who are interested in trading that, you would need to first look into the pattern, look into where it bounced at. But just looking at price action itself, if at all you're looking at the downward move or upward move, it is just too close to the 80 site number at this moment of time, so it's not ideal for trading. It's not an ideal trading price because it's at 1.2483. Now 1.2483 is just too close to 2480, so you're looking at 80 and above by 10 pips to look at buying opportunities. So only 1.2490 and above would I see buying opportunities, or if not, still on the sell side would be best if it's under 80 by 10 pips, so 1.2470 and under. At this moment of time, prices, just price action itself, solely price action, it's looking at prices trapped in between the two side numbers of 80 as well as below. The 80 side number especially, okay, so you need prices to go under 80, give you more bearish momentum, but again, you've got challenges here. These challenge here, meaning the 3 moving averages, might then give you support area. So we would still need to wait till prices go under, and only if it goes under all three lines, under the 80 side number as well, then you've got a bearish momentum. If not, then this is just a correction for now and giving more room to the upside for the GBP US dollar. Okay, so there you go, guys. That's the GBP USD there for you. Any questions at all? Anything that you would wish to ask, feel free. Okay, and we shall then take questions as of now, so we can discuss the trades that you're on as well. It's very important for you to find relevant support and resistant areas or zones. And you've got prices coming downwards, you need to look left. Has there been any strong support areas as well? You can always go into the 4-hour chart, look into prices coming downwards. But again, you've got 200 moving average here, you've got some support here, you've got very, very significant support at this area here, because this was quite a big bounce upwards. Okay, prices is here, closest to it, you have some support here, some support here, some more support there. So along the lines of this, between that and here, okay, this is a support zone potentially. Let me just change the color for that, give you a bit of a clearer picture in that color there. Okay, all right, so that justifies the need for prices to first go under that blue zone, as you can see, made up by the two line between 1.2490 and 1.2475 area there. Once it goes under these two blue lines, then you can see that it's under the 80 side number, at least by 7, like going to 2470 and below, then you've got more bearish momentum. If not, then it might find this zone to be the support zone to actually bounce up from. So as you can see, it's a really risky area at this moment of time, where the prices are sort of trapped between 2490 and 2474 area. Okay, that's your GBP USD. All right, but it looks like it's closer to be you know, having the bias of the upside as opposed to the downside, because the downside's got more challenges. It's easier for the price to bounce upwards and finding support at where it is at the moment. So the biasness is more to the upside for the GBP USD. Okay, even in the 4-hour chart, on the daily chart here, it's a bit trapped in between the prices, so we need to wait till prices go to a certain level in terms of price. Okay, I think I've got questions here. Sorry about that. Sorry to keep you waiting. Give me a second. Just got this trouble with my mouse at the moment. Give me a second, guys. A bit challenging with my mouse today. I'm not sure why. Okay. All right, I think I've got questions here, but just bear with me a little bit. I'm not sure why, but my mouse is simply not working. All right, so GBP AUD on a 1-hour chart, Michael says. Okay, give me a second. All right, let's go to GBP AUD, yeah, for the 1-hour chart. Let's look at what's going on with the GBP AUD. So let's just change that. Now, GBP AUD on a 1-hour chart, okay, that's quite a good one. I mean, I myself have been waiting for this, this one here. It's favoring the downside, but due to the strength of the Australian dollar as well, it is a bit of a struggle. That's why it's making this trade a little bit slow to hit the target as well. But it has crossed under this centroid area. It is now finding resistance as well. Okay, so let's just go into the 1-hour chart in a bit. But here, looking at the 4-hour, we are on the 1-hour chart. Sorry, we are looking at resistance. So there are more biasness to the downside. Okay, now here. It may be a very good idea for you to start drawing the ABCD pattern based on what you can actually see here, because this is quite a nice pattern to be drawn based on the ABCD pattern, mainly because the way it has actually hit the moving average here. So if you're starting your A from here, you do your B here, and then you see your C is there. Yeah, your C. So then you're looking at a potential ABCD to the downside. Of course, you want to draw your centroid and then look at your centroid and then trade under the centroid. Okay, so let's just do that very quickly based on real lines. Okay, there we go. Let me just zoom out, zoom in a little bit. So perhaps it becomes clearer this way. Okay, let's do that. Trend line all the way down here, A to B, okay, and then C to D. Let's just make it a bit more obvious. Mark your potential D area, okay, or your take profit area. Then you redraw your line from A to B right there. Let's do a bit of a check of A to B and look at where your C has actually landed at the 61.8 area. Okay, that's a good one. So 61.8, yeah. Now 61.8 usually gives you the potential of 1.618 as your extension of your Fibonacci when you pull your B to C. So one way is AB's length equals CD. So you've got an idea where D might reach 1.6034 area. Okay, now 34 is good, 40, maybe 60 is even better because it's before the 50 area. But 30, 34 itself, 35, it's good enough for that area. So AB equals CD gives you the D able to reach there, but we need the entry area as well. The entry area, trading area, once you converted this ABCD into a geometric pattern, you have got that centroid area at 1.6197. So 6197 to the upside is very close to the 00. Okay, 6200. All right, so 6190 will be your ideal trading area. Okay, 6190, let's say 1.6190. Okay, that's ideally an area that you can enter for the bearish momentum. Okay, now 1.6034, let's say you're just taking that at 1.60, 1.6035 or 40, let's say. Okay, 6049.4, that's about 50 pips or so that you can be targeting. 6190 and oh, that's probably more. 60, let's say 6060, yeah, 6034, 6060 will be better because it's above the 50 area. Okay, so there you go. Let us mark this line as well. 6060. 1.6060, yeah. Okay, so you've got that line there, ideal take profit, the top line there. Okay, then 6190, so I'll adjust the line at 6190 as well. Let's do that. 6190. Okay, there we go. So we've got that lower line there. Okay, 6190. So 6190, ideal entry area, looking into potential take profit or exit area above the 50. Okay, so you would need to adjust your psychological numbers always, whatever it has given you. So if you're pulling the crosshair from that area there, okay, all the way down, you're looking at 100 plus pips, 120 over pips. If you're looking at trading only once prices has gone lower at the 1.6190 area as your potential trading area, and then your potential exit area, take profit area 1.6060. So that is basically what may be giving you an opportunity for, and it's looking like it's small pattern here, but then you've got 100 plus pips there. Even if you want to take it less than that, 60 to 80, measuring your risk properly and becoming more, instead of 6190, you want to enter under the 80 side number at 6170, let's say, then you are appearing more conservative, then you want to take only 60, 70 over pips, it is still ideal. But that way, you will then view the market in a more risk-averse manner, meaning that you want prices to first be pulled down a bit more to look into the dominance of the bears, and then with the dominance of the bear or bears in control, sellers in control, only then you want to enter with them. Then you can look into 1.6170 as your ideal entry area, looking at still the 1.6060 as your ideal take profit or exit area. Okay, so hope that is clear. That seems to me like quite a nice sort of potential trade there on the GBP USD, sorry, GBP AUD. But let's just look into what's going on the longer time frame as well. Now, I see lots of bears dominating this this pair here, GBP AUD, on the monthly. On the weekly, I can also see the same thing with prices way down under all three lines. On the daily chart, we can see that yes, it has also built more momentum to the downside. On the 4-hour chart, we can see again prices under all three lines, nice 3 lines pointing downwards. 1-hour chart still looking at a little bit more uncertainty on the 1-hour chart. So hence the reason we are looking at a little bit of delay in prices falling fast, especially on the 1-hour chart. We may have some thinking time by investors and traders. So this stage, we need to look at 1.6218 is your trading, is the current price at this moment of time. Okay, 1.62, yeah, 17, which is very close to the 20 side number. So you would need price to come down under 6220, like for example 6210 or 6190, like this price here. Only then we can see more dominance by the sellers, because by then if it does reach the 1.6190, then you can say that the bears are dominating more, and at the same time prices are under all three lines. So overall, I see a good opportunity, but you will need to wait for the price to first come lower, go lower, and go under 6200 towards 6190 or 6170 to give you a better opportunity with higher probability and lower risk. Okay, GBP AUD, that was quite a nice spotted one actually, Michael. Thank you very much for that. Okay, next we will then move on to Euro JPY and perhaps a bit on GBP JPY as well before we wrap it up. Okay, so let's just clear out most of the lines right there. Erase all drawing here. Okay, so we have got this Euro JPY going on at this moment of time, and I don't have it saved, the one that I've done it previously, so I'll just reinsert the indicators there, especially the trend lines. So moving average 50, we'll start off with 50, and then we'll go on again. Trend, moving average, sorry, 100. Okay. There we go, and then lastly 200. Exponential. Okay. There we go. So we've got all these three lines. Now, it is quite unpredictable even in the 4-hour chart as we are looking at it now, Euro JPY. So we move on, move a little bit higher in the 1-hour time frame. We can see a little bit more bullish momentum. It's finding support in the euro versus the yen. So here is giving us a bit of a hint that the yen is sort of weakening at this moment of time, but we would need more confirmation. So we're moving back or lower time frames at this moment of time. As we move down to the 30 minutes chart, it's finding more support, more support. And it has found support at a very strong area of the 200 moving average, which is a very good thing. So here it's hinting me that the short term has got a bit of a corrective type move maybe, but momentum to the upside. Dominated by a little bit of bulls, a bit of buyers are actually going into it, and hence the reason it's finding support there. Now, what if we go onto the 1-hour chart? It is still looking the same. It's looking like it's finding support, and the support is just static. Static also means it's quite strong there because it's from the 5 minutes, okay, let's say from the 15 minutes onwards, 1 hour, 30 minutes, it's all finding that support, and it's actually looking like the momentum to the upside is picking up for the euro versus the yen. So we're not talking about euro in general, we're talking specifically euro versus the yen. Euro in general, in terms of the sentiments of the market in the eurozone, that is on the weak side, on the bearish side. But again, we need to treat each pair as having their own personality, so we cannot decide on the euro to the downside for one pair, or just for euro being down and it's going to be down for all pairs. No, it shouldn't be treated that way, because that would be very, very risky. It all has its own personality type for each pair. Okay, so here we go into the longer sort of time frame. We could see that the dominance is perhaps still to the downside. Okay, they may be finding correction to the upside on the lower time frames, but that lower time frame upside may be a corrective or correction. Okay, so as we move downwards, I would avoid the daily chart, especially since prices are still in between. The 4-hour chart is the same, it's giving me that hint. So I would avoid anything from 4-hour right down to the monthly chart at this moment of time for the euro versus the yen. Now, going to the 1-hour chart is a little bit clearer, but let's go on to the 30, let's go to the 15, let's go to the 5. So from 5 right down to the 1-hour chart, lower time frame, shorter term type trade, it's a little bit better. Okay, meaning to the upside. So that upside move that we have on the shorter term may be a corrective move for the euro JPY, because at the very end, higher time frame is giving us hints to the downside. Okay, so let's look at whether there are opportunities that we can take advantage of. Now, as I mentioned earlier on, I like to look at this area when it does give you an opportunity where C sort of or finding support or resistance at this area here on the dot, and that's very nice for me, because that will be a very strong type support there. So we take that one down this way. Here we've got A, potentially B, and then C reaching this area here. So that is quite nice if we were to treat that as a potential A to B, let's say. Okay, and then the B to the C all the way down here, let's say, and then we're looking at some more potential move to the upside there. So that corrective move could actually be reaching that area there. Okay, there we go. So if we complete that drawing from here, let's now measure the C point as, in terms of Fibonacci, it's very close to the 50. If we take that this way, let's see that it's 61.8 or 50. Let's say we take the 50 area, but I'm going to just be a bit clearer there. Okay, so it's closer and it's nicely landed at the 50% Fibonacci level. So you can take that as an ABCD with a C landing at the 50% Fibonacci area. Okay, and we'll cross that one out a little bit, give us an idea of where the trading area should be based on the centroid. So it should be above the centroid. Now, above the centroid, prices is indeed above the centroid, but is it above the site number? The answer to that is no, because you've got the prices at 121.02, and that is just too close to the 00 site number, and you're looking at only if prices crosses upwards by 10 pips, like 1 to 1.10, then we can consider some short-term trades on the upside. Or if you want to appear more conservative, then 1 to 130, because that's above the 20 side number and above. Then you want to look into targeting this area here, but would be ideal to target at least 10 pips below the 80 side number. So 1 to 1.70 would be better. A better price to exit, a better price to consider exiting, and this is all based on the principle of psychological number or price action itself. Okay, so if you're looking to the left as well, you could see that it's just far too many support, too many resistance as well in this area here, let's say. Okay, there you've got resistance. So if I'm taking that long way, we've just got that area. So 1 to 111 there. as well. It's just too many resistance. As you can see, resistance, more resistance. So we need prices to go above these three lines here, above perhaps 1 to 120 and above, which is 1 to 130. Okay, 1 to 130. So if 30 you're entering, then 70 you're exiting, then that's about 40 over pips to the upside. That you could potentially, you can easily do that as a pending order so that you don't hurt yourself, and put that as a pending order. And if at all you want to know the ideal stop loss, you can always pull your Fibonacci, let's say 67% of A to B, and you mark your 67% here. Okay, that's your 67%. Okay, so that is your ideal stop loss area, whereby from your potential entry area, approximately about 40 over pips right there. Okay, about 40 pips or so is that ideal entry, and then you've got perhaps about 50 plus pips, 50 plus pips also is your potential profit, 40 plus pips is your potential stop loss in terms of number of pips. So that will give you a ratio risk reward about 1 to 1 roughly. Okay, so that's basically it. I think we've covered that on the Euro JPY, giving you a little bit. Like I've mentioned, I would like to avoid the other time frames as it's just not clear. Prices are in between all lines, so it's not really a good in terms of timing, in terms of price action itself, in terms of trend as well, not that clear. Okay, GBP JPY, we are looking at the 30 minutes now, and I could easily avoid the time frame as it is, because it's just giving me too many sort of sideways-like market at this moment of time. It looks like there's a bit of like a triangle kind of area that it is trading in. Okay, so if I were to do that, there you go. Okay, so we've got this price in between, and it's constricting. Okay, it's contracting. So the prices are contracting, getting smaller and smaller and smaller, and then it will probably burst out somewhere here. So this is where we are waiting, but it is definitely on a sideways at the moment. Sideways when markets in balance, but then there's uncertainty or unsureness, just not sure of which direction. So that if they're not sure, the market's in doubt, you would need to stay out of the market. It will probably be the best tip I can give you. Okay, so here 14203, again, it's very close to the 142.00, so it's not an ideal price to trade anyway. Okay, so we forget about the 30 minutes chart. The same goes for the 1 hour. On the 4 hour chart, it's giving us a little bit of clarity and biasness to the upside, because it's above 3 lines and it's giving us a bit of support there. Now, on the longer term, it's becoming clearer in the longer term that you've got a bit of upward momentum, but not really when it comes to the weekly chart and the monthly chart. So here is just giving you loads of uncertainty. It's probably a type of pair that I would avoid as of now, because it's not giving me that clarity as yet. So it is a pair that is not ideal to participate in trading as of now, especially because of price action itself in terms of trend direction is just not clear. Okay, that's for your GBP, JPY, but you've got quite a number of other pairs that are giving you lots of good hints, good patterns as well, a better clarity in terms of trend direction. So you want to take that on as opposed to a pair that is not giving you clear directions at all, because you will be increasing your risk and lowering your own probability of trades. Okay, all right, guys, I think that's all I've got for you guys. It extended a little bit more than an hour. So if you guys have got any questions at all, if you've got no questions, we can then wrap it up here and meet again next week on Monday. So it's going to happen every Mondays and Thursdays, and do help me pass the words around for those who are interested in joining me live, and give me some more requests on what I should be looking at for you guys before the webinars, so that we can all discuss and help each other on the trade ideas and benefit from it. Okay, any questions at all, guys? If not, then I shall then wrap it up here. Yeah, no questions. I'll just give it about a couple of seconds or so to have you type if you've got questions. If not, all right. Michael, most welcome. Okay. Any questions from anybody else? You guys are okay? Clear? All right. Okay, good. So in that case, no questions at all. I would then be, let me just see if I've got questions. Thank you, Mr. Munu. Okay. Yes, you guys are most welcome. Be happy to share this every Mondays and Thursdays. We'll be having these kind of webinars running every day in the members area. It will still go through GoToWebinar, but it will be for members only for the rest of the days. The Mondays and Thursdays will maintain for everyone, but we'll discuss more patterns, including more commodities as well, and more tips for you guys for those who are members for FX Geometry. So it will complete very soon, and you guys will be notified when you guys can join the site as a member, and we shall share with you more videos. We will have videos that runs on Sunday night as well, so you can plan your trades for the whole week. But we will have webinars from FX Geometry live, giving you trade ideas every day. Okay, so then you're able to benefit from it. Okay, because we're looking at aiming, potential trade ideas that is worth, hundreds of pips a week. So that's been achieved quite easily, I must say, because of the probability of the trades, and we're measuring our risk very well. So I would like to share all this information with you guys as well, so you guys can benefit from that. Okay, so I shall say a big thank you for attending today's webinar, and we will wrap it up here, and we'll see you again next week on Monday. We just have got loads and loads of patterns on bigger time frames, so we are looking at these patterns unfolding at lower time frames, giving you loads of opportunities over the days and hours and weeks ahead. Okay, all right, guys. Have a good one. Have a good night, good evening, and have a good day tomorrow. And happy pipping. Bye bye for now. Thank you.